Great afternoon, everyone. Hope you are doing well. It is that time, 2 o'clock on Friday, and we are about to have another one of our business office trainings. Always get super jacked about these, and it's just a time where we come on and look to train on different areas of the business office. Within a accounting context, and so each week we've been walking along, certain areas in accounting, and we looked at move-ins and impact on financials, and we talked through revenue. We talked through incentives, the importance of understanding incentives. Last week we covered incentive burn rates, and so we looked at right. And when we say incentive, we're talking about the comprehensive cost of a move-in. So not just when you waive a a community fee or something like that, but we're talking about waiving of a community fee or having a first full month free rent or complimentary rent. If the new move-in of the prospect was from a paid referral, like a place from mamacare.com, and there's so many others. And also the commissions for the internal sales team, because that part is very important as well to incentivize them. So all that cost and understanding that, how long it takes for that total cost to burn off before the community is actually making money and have positive revenue. So we looked at that last week. And so this week, very excited. We're going to talk about expenses, right? So we looked at the P&L and we looked at the first section. The first half is revenue. Now we need to look at the second important piece of the profit and loss statement. So remember, profit and loss is going to show our revenues and it's going to show our expenses. And it's only once we take our revenues and subtract our expenses do we get to see if there's anything left over. So we're gonna look into the expense side of it, and specifically the processing of invoices. And I'm talking about bills from vendors that need to be processed. And so we're gonna dive into that. And as always, we're gonna look and see how that impacts our financial statement, and how we account for those different items so that you guys can see where it shows up on the balance sheet, where it shows up on the income statement, because that's the reason for all this. There's a place for the technical piece and getting into a system, whether you're using Yardi or AppFolio or QuickBooks or Bill.com, on how to do that. But with these trainings, we want to focus on why, conceptually, why are we doing this? What happens when I move somebody in? What does that do to financial statements? What happens when I put an invoice in? Why is the accountant harping on the coding and all that stuff? So we're going to take a deeper look into that. So again, last week was the incentive burn rate. Now we're going to look at invoice processing. And you can see that I made a typo, and impact on financials, which is why it's so important for the reviews. And you'll see why the AP process is built to have the multiple reviews to catch errors and things like that. Wish I could tell you I did that on purpose, but it's a great segue into what we're going to talk about. All right, so let's dive into what we want to look at. So I'm going to bring this spreadsheet over that you guys should be able to see, and we're going to, like I said, we're going to dive in and talk through our expenses and how we account for. So what you have on your screen, so and let me back up. So I want to walk you through our business office leaders, right? So invoices in many cases are being routed to the community for the business office leader to enter into the system, okay? And in many cases, there's a accounting system that can handle the digital routing of those invoices. Long ago it was more so all paper, and you had at least from what I remember, you had a color-coded folder, and you would have the invoice and everything in there. You pass that folder around to get sign-offs and all that kind of stuff. So checks can be printed. Thank goodness we're beyond that point, at least most of us are. And there's a lot of systems, so much technology out there that's going to allow for those invoices to be at the very least, scan into a software, and you have, awesome computers that can code most of the information on the invoice, but at the very least, you're putting it in the system and you're going to do what we call coding or indexing, and essentially taking that stuff that's on that invoice and putting it in the accounting system, and then we're going to send it through a workflow. So that's what we're looking at right now. Regardless of what system that you use, Bill.com, Nexus, you already have Portfolio, like I said, when they have a good AP component in those systems, you're going to get something similar to this screen right here, where you're able to see an image of the invoice, and then you have the actual system where you're going to index or code that information into these columns here. This is the first part. I want to show you guys how when you're coding your invoices and pushing this through, you are building the financial statements, right? You are initiating those, the amounts that are showing up in the various accounts, and you do that several times. And then at the end of the month, you have a financial that's full of expenses. And on the top side, you've done your billing, and so you have a financial that's full of revenue. And that is the P&L right there. So let's walk through. So one of the first steps that we talk about is review the invoice, right? Review the invoice. I'm a big believer of, again, you're opening up the mail, you got the invoice in hand, maybe before you even scan it. There are multiple ways and multiple processes people have in place, but, look at the invoice and we want to index it, right? So I'm looking at the vendor, right? What vendor are we paying, right? So imagine us circling this to focus our eyes there and say, okay, I know I need to index that vendor. Okay. Another important piece, the invoice number. We want to capture the invoice number. It's so incredibly important to capture that accurately, because again, most of these systems are built in to catch duplicate invoices. We love our vendors, but we don't want to pay them twice and three times. But the system can only work for you if you're putting in that invoice accurately and you're doing it consistently. So don't put a period in an invoice number or the number sign or invoice number. So you want to put the invoice in consistently. You want to have a process and say, hey, when in doubt, put the invoice in like this all the time. So that part is very important. So like utility bills, a lot of times they don't have invoice numbers. So again, creating business office that have a go-to of this is how we put in utility invoices, right? We put in the account number, then we put the date, and then we put whatever, because the account number won't change, but the date would. So that's how you can have that unique invoice number, but just make sure it's consistent so the system can work for us. So we're circling the invoice number, we're indexing that. Invoice date, right? We want to capture the invoice date. Once again, focusing our eyes, circling that, pulling that over. And then just the rest of the invoice has to be indexed over to here. Now, again, a lot of these systems, when we're able to scan these invoices in, the computer is able to read a lot of this information, and then it'll bring that information over here. But no matter what, the business office leader still is the one reviewing it to make sure the information is accurate. All right, so let's start. So after we review, right? So we've done that. And again, I'm a believer of, circling and know that you focused your eyes in. So when we're scanning these documents in, we see those ink marks just to confirm that you're owning your invoices. This helps you as you're going to be the one that sees all the invoices. And this is why you're the perfect candidate to know what invoice is missing, because here's another tip, making sure you have a schedule of recurring invoices, right? So you're able to go down a list when invoices are coming in and you haven't received an invoice. We can be proactive. We can reach out to vendors. We can reach out to accountant and say, hey, look, I haven't received a landscaping invoice, but I know it's coming in. Or we had some extra work going on, in a resident room or what have you, but I haven't got the invoice, but there's a repair bill going. That's how the business office is partnered with the accounting team to help produce better financials. Better quality financials, and things are intact, because when accounting and the business leaders work hand in hand, you have a much better product. So most of the systems is going to look for vendor name or vendor code, right? So you're able to save your vendors in the accounting system based on a certain code. Once again, let that be consistent. So if it's going to be the first two letters of the first name and the last name, or the first letter of each name, the first three letters of the name, whatever it is, make it consistent. That's a flow. That's just good vendor management. And now you have consistency there, and it's much easier when you're searching for things because you know what to look for. So in this case, we're going to put the vendor code here, okay, right? And then the system, is going to pull up the rest of the information. This is the address information that the system pulled up once we put the vendor in, okay? We want to make sure, and again, we want it to be Tatum Accounting Services. So we have Tatum Accounting Services, and we have the address. And then we want to index and put our invoice number in. Again, not rocket science, you're just pulling directly from our invoice, but it's very important just to understand as we go through this information. We're going to put in our invoice date, right? Okay. Payment terms, okay. And due date. We want to make sure we're capturing the due date correctly. That is so important. We want to make sure we have the payment terms. Most of these systems, again, end of vendor record, and you can store based on individual vendor what the payment terms are. So hopefully this automatically defaults and we're able to get the correct invoice date, because now fast forward to once the invoices are in the system, okay, and it's time to actually pay these vendors. Remember, we talked about this before, but just in terms of cash flow management and doing whatever we can to get revenue in the door, so collecting on accounts receivable as fast as possible. But then when we're having the vendor payments, we're able to take advantage of vendor terms so that we can hold on to the cash long enough, but then also paying our vendors timely, because they're very important. And the communities couldn't do what they do without their vendors. So we're advocates of definitely paying our vendors timely, but we want to take advantage of terms, which is why those terms are negotiated ahead of time when we open up an account. And if we have 30-day terms, which we love, we're able to pay the vendors there. So if we didn't have it built out and the system's automatically defaults to payment terms, we put the payment terms in there. And then we want to be able to calculate, change this to a date value. We want to be able to calculate what the due date is. Okay. All right. So so far so good. We've got the information in there. At the top section, now we want to enter our amounts. So once again, we're just entering from the invoice, which is important. And I'm going to make sure my number from formatting is good. All right, now we get down to usually the next section of the indexing, where we have to pick the correct GL account. Okay, so as you know, on our financial statements, we have a list of accounts, which all that comes from your chart of accounts. So if we scroll over here a little bit, this is obviously a small and abbreviated list, but this is the beginnings of a chart of accounts, where you have different account numbers and then the account name, and then we even through the type over here, and we'll talk about that more often. But asset and expenses, obviously you're going to have revenue accounts and so forth. So the accounting system, your AP system, is going to have your chart of accounts stored in here, and the business leader's job is to, based on the invoice that they're indexing, what are the services for, so that we can pick the right GL accounts. So you want to be familiar with your GL accounts, okay? You should have a copy of your chart of accounts from your accountant, and spend time looking at it, going through and making sure you can identify these accounts. And don't be afraid of the balance sheet accounts, and understand the accounts on the balance sheet, especially your fixed asset accounts, because based on your community and you all's process, there's criteria on what makes something a fixed asset. We won't dig into that here, but just understanding that you will have to interact with the balance sheet and have some codings go to the balance sheet. Okay, so in this case, this is an accounting fee. So we're gonna click our drop down and find our GL code that says accounting services. Okay, purposely this amount does not automatically match this amount, because you can have a couple line items that match this amount. So we want to put in what we have by line item. This is the by line item amount. So it's 2,500. And then we want to put in a good description. I am a huge proponent of putting in really good descriptions, because that description is what's coming over to the financial statement and into the general ledger. So, these accounting systems are able to drill down. And when we're doing financials, when your president is looking at the end of the month and trying to make sense of some accounts that could be over or under budget, these descriptions are so important. I can't tell you how many financials we've reviewed and, just so much experience of doing that month-end process. Well, these descriptions either make the process a lot easier or make the process a lot tougher, right? We don't want to ever get in the habit of just not having a description and putting that in, right? And then when it goes to month-end review, having to go into another system if the AP system is not linked in with the property management system, or go try to chase these invoices just to see what the description was. So look at the invoice and put down a really good, clear, concise description, so that it makes it a lot easier for everybody when reviewing the financials. A lot easier for you when you have to go back and research an item. You've put a good description. So in this case, we'll just call this, we'll say this is the outsourced accounting fee. And maybe this is a monthly fee. So let's just do monthly outsourced accounting fee. Okay, so we've got a good description that's going to pull over into the accounting system. So when we drill down, we know exactly what this is for. Okay, and so once we have that information coded out, so that was step 2, right? So we just basically indexed everything from the actual invoice into our accounts payable, our accounting system. And from here, once we're comfortable with that, again, these systems are built to have a digital workflow that go out to the appropriate leaders, however your company has it set up, where you initiate it, and then there's going to go to certain approvers, right? Replacing that physical folder with the invoice that had to go to the different leaders to sign off on it. This is able to go digitally. It's going to go to their digital dashboard, and then your leaders are able to go in and review or reject based on the information that they see. So if there was a miscode or whatever, your leader, because maybe you were not sure what the vendor, what the coding was. Maybe it was a new foods vendor. On the care staff, it was, a new vendor, and you had to make your best guess of what the GL code was. But then when it went to the health and wellness director, they were able to see and maybe kicked it back and said, hey, this needs to be changed. But in any event, that's the digital workflow to approve those bills that you initiate. And then once it gets all the way through the workflow, again, based on your company, how you have it set up, it can be 1, 2, 3, 4 approvers. Many times that end approver is that property accountant before it goes into the system to make one last check, or your president has a last check and it's approved, and then it goes into the accounting system. And once it goes into the accounting system, it's going to hit against your accounts payable, which we'll see in a moment. So that's where so this is what I just talked to, initiating the invoice workflow to go through the workflow, and then the final approval of that invoice to then push into the system, or push into the GL, because it can be the same system, but it's still an approval process to push into the GL. Because we don't want, think about this, we don't want to index this and then that go right to the GL. No, again, we want to go to the approval process. Like in my opening slide when I had N twice, right? We want a couple sets of eyes on it. It's going to your leader to hit against their budget. So that's why we have to have their vote to say, yes, that's good. Oh no, this bill is off. We negotiated, a different price. So you're just indexing and initiating that path, and setting everything up so that it can be pushed into the system. Okay, and so then step 4 would be final approval, and this invoice will wind up in our general ledger. All right, now let's take a look. So let's bring it all together, right? Let's bring it together from pushing over the invoice and then taking that to our financials. Okay. You guys, so guys, hang with me. So I'm going to delete that out. So we're going to come over here to our financials. Okay, and we're just going to, so we have a income statement here, right? We looked at revenue. We looked at that for the last several weeks. So we have revenue up here. We've got concessions, and then we've got expenses. Obviously, there will be a lot more expenses we're talking about a full community, but for the sake of this example, just really want to bring to light each of these invoices here, the majority of them anyway, are being indexed by you, business leader, and being coded through this process to then feed over into our financial statement. So among that final review step there, now we've impacted the financials and we're building the expenses. So the coding is so very important in getting that information into the system and correct here, which is why we appreciate the workflow, appreciate the second eyes. If we can get it correct here, that's going to limit the misclassifications in these different accounts. Okay. So real quick, we got our cash, we got accounts receivable. So looking at the balance sheet here, cash, accounts receivable, we've got some fixed asset accounts. Okay. We can dig more into that later. Then we've got our liabilities. So there's our accounts payable, reservation deposit, and so forth. All right. So let's see what it looks like real time when we're coding these invoices. Okay. So we've indexed it. So we're gonna go back through our steps. We've indexed it. And we've gone through all our initiating steps. Right. All right. So I'm going to take this off. Okay. So we've got to pick our coding, right? So right now we're going to say we're in this month. We got to pick our coding. You see that we've got expense accounts, offered expense, bank fees expense. Well, it's really not an invoice for that. So the accounting is making a journey entry for that when they're reconciling the bank statement. That's when they see the bank fee. We've got computer IT, and we've got a accounting expense. Okay. So what does it look like if we miscode an invoice? You know what I mean? And say, going back to this system, we accidentally pick office expense. Okay. Did you see what just happened there? Right. So right now, as at this point, because remember your financials are live, right? So each time we push the students going to the appropriate period, it's changing these numbers. So right now, office expense for this month, the second month in this P&L, because that's 1 month, it's $500. So we've had an outsourced accounting fee come through, but we mistagged it to office expense. Okay, so if we come over to our financials, right, and at the end of the month, we're reviewing the financials, and it's like, well, first off, office expense took a big jump. We need to dig into that. And then we're missing an accounting expense, right? So just notice how quickly this can go out of whack. So if we didn't catch this error and said, oh, well, I need to accrue this expense because we don't have it, we could potentially have duplicated an expense because we have it coded somewhere else and we didn't catch it, and now we've tried to accrue, and so now our NOI is really taking a hit, right? So if I just did that, now we're misrepresenting because we didn't realize. Now this one is obvious because it jumped quite a bit, but it wasn't called. And hey, guess what? We've put another expense out there on the P&L, and we want to avoid that obviously at all costs, right? So very important that we put it in the right category and we're able to catch that at the time of we're indexing. All right. Let's say, okay, what about we put it to fixed assets, right? Let's look at a totally different set of books, right? So we're going to watch our balance sheet. Okay. Again, moving fast or whatever the case is, it would just inadvertently miscoded, and we hit a fixed asset account. Now, no, notice our fixed asset account, that's not on the P&L. So now we're missing the expense altogether. And then, so this is a really great opportunity where we can duplicate an invoice because they're like, hey, I thought I saw an invoice. Maybe I didn't push it through. Hey, accountant, we need to accrue this. Or accountant's reaching out and say, hey, look, we didn't get that invoice or what have you, and we accrue it. And now we've got it sitting in the P&L, but we also have it sitting in the balance sheet, which is obviously incorrect. And we would drill down here and see that, oh, that was a Tatum Accounting Services invoice, which is outsourced accounting, and not truly equipment and machinery. So very important for those checks. And your accounting team would catch that, or more so even you would catch that, because you're going to look at your financials, right? We want to teach you to be able to read those reports and see these issues even well before it gets to the accounting team and understanding where this information hits and where it's going to go. And so this is a great example to see that when we're coding it here at the point of indexing, that's going to pull over to the financials. And if it's not in the right category, during the review, we're reclassing it. Your accounting team could potentially be making journal entries to reclassing and capturing those appropriate buckets. But what we want to do is we want to catch it here, because it's a lot better to catch it here and get here, so that we can have, again, more accurate financials, less opportunity for something to slip through the cracks. We know that all expenses are accounted for. And then here's another tip. As we take each invoice like this and we're diligent with it and we're putting it into the right system, when it comes time for budget season, it's going to be that much better and easier to capture that, because a lot of the budget depends on history. And so, a lot of that process is looking at the trend of accounts. But if there's no integrity in the expenses that are hitting those accounts, then budgets can potentially be off. Right now, that's just one small piece that goes into a budget, but it's this runs so deep in terms of capturing and having accurate accounting, and which we're also teaching having a successful business office. So important, and understanding these financials, and you're looking at these financials and understanding what we're talking about. So you guys are winning. All right, so let's obviously code this to the right account, because it is an accounting services fee, and we've got it captured correctly. And so when we're going to report our financials, we see our fixed assets are back to zero because that wasn't a fixed asset. And when we report our financials, we're able to report them appropriately, and we're rightfully showing the expenses for the period. Okay, so a lot covered there, but you guys are coding and index invoices almost daily, and whatever accounting system you're using, whatever AP system that you're using to do this comes into play. And you want to make sure that you're capturing that more. So you want to make sure that you're having a processes in place to make it easier to capture those things. Again, going back to how you're naming your vendors, right? Like, don't gloss over that. Make sure that that's in place, and something good to adopt. So there's, again, it's easy to find. Vendors, invoicing, make sure that the invoice numbers have a protocol. If the invoice has a letter in it, or if it has a dash in it or a space in it, have a process to say, okay, we always enter this, we always ignore the space, or whatever the case is, so you can ensure that every time an invoice is going into the system, it's going to match. And so if we ever try to enter the same invoice the next month, the system is going to yell at us and say, oh, that's a duplicate, and we're able to catch it before a check goes out of the door, because there's nothing worse than letting you get all the way through the process, cutting a check to the vendor, and then may or may not, reach out and let us know they received a duplicate check. Not because we have bad vendors, but just because that process, how long that process may take before they get it. A lot of them have lock boxes and it goes right in. So, let's control what we can and have the processes in place to make sure that we're not allowing that happen. And a part of that is using the systems, features that are already built into the systems, controls that the systems have put in place so that we can catch payment terms, and making sure that we're doing that. Because what happens if, we put 45 days in, right? And so now when it comes to pay this vendor who's really on 15-day terms, and we put 45 days in, and again, that pushed through. Now, when we're cutting checks weekly, we're not even looking at this invoice, because again, we've been taught to, yes, we want to pay our vendors, but we want to pay them according to the terms, because those terms have been negotiated. They agree with those terms. They like those terms. So that's when we want to pay. But we're going to pay this vendor 45 days when they're really on 15-day terms, right? You think that could run the risk of getting our vendors upset, and we don't want, we don't want to do that, because again, it's a partnership to make sure that our business office, our communities are running top notch. And it takes great vendors and great individuals to do so. So we want to do our job in the business office. We want to make sure that we're putting those processes in place, so that's not happening. So we put the 15 days, and this vendor will be paid time. I can go on and on about this. You can see how excited I get about it, just because it's so important. We're gonna put a comma here. I wanted to bring to light, what it looks like when we're coding these invoices, these bills to vendors, and how it's impacting the financials. A lot of this is not even new information and things that So bringing it all in on how it's impacting the financials. How can I be smart about reading my financials? I'm seeing the invoices every day, right? I'm in the best position to be able to call out when something is missing. I'm in the best position to speak into the financial close process, which is what I want you guys to understand. Nobody better than you that sees this monthly, have that recurrent list of vendors, have all those things, and so that you can have your valuable input into the financial, support your president, support your communities, and your business office will continue to win. Awesome. Well, I hope you enjoyed that. I hope you learned something. I hope there's just one nugget that you can take from that. Go back and look at your financials. Go look at your system where you're coding your AP and go find some of those same things that I did. Make sure you have an understanding of it. Make sure you're paying attention to your payment terms and invoice dates. Just go back and look at that. I challenge you to, and just make sure that it all makes sense to you. If you haven't seen a chart of accounts, reach out to your accountant, get a chart of accounts, get familiar with your chart of accounts, because again, there's nobody better than you who are seeing the invoices that your community is using, and when something looks off. All right, once again, my name is Burdett Tatum. I am the founder and CEO of Tatum Accounting Services, and we have an aggressive mission to help the business offices in the senior living community. Each business office we can touch, and senior living industry, each business office we can touch is wonderful, and we want to touch them one at a time, and we're going to continue to be here to support and lock arms to help you all win. Thank you so much.